Boom. We are alive, ladies and gentlemen. Thank you for joining us today. We're going to be taking a look at Bitcoin, Ethereum, Cardano. We're also going to be looking at the S&P 500, the Dixie chart, the Nasdaq, just to get a general sentiment. And then we'll take a look, finally, so stick around for this one, at our on-chain metrics. Just a little bit about what's going on in the back end with Bitcoin. As we've gone over this a few times before, we think it's super valuable and very helpful. So we're just going to keep repeating that process and seeing what we come up with. So what we're going to do now is dive straight into the Bitcoin chart on the 4-hour. So we've been watching this trading range for almost 2 months now. What are we at here since our first selling climax? 50 days, so 10 days short of 2 months. That's incredible. This is what I said this time would be, was a little bit boring, generally used to wash people out in either directions. Now, one of the things I wanted to point out was a chart that Glasswalker did, one of our private members. So everybody in the Wyckoff community is thinking that we're going to get an accumulation. And if you've been studying with us for quite some time, you will know that my favorite accumulations take usually at least 300 to, let's say, 1,200 days. Somewhere between 1 and 3 years is like the most tangible, exciting accumulation pattern. In the intermediary of the markets, that's not what we're getting. We get these much shorter duration stays, and also accumulation can very quickly turn into redistribution. And we've gone over that a few times before. And then you start to see these similarities between the chart here. I like what Glasswalker's put together. So we're kind of right on the edge of Bitcoin potentially coming to test lower. Now, this can be invalidated very quickly, and this is one of the things to keep in mind. So what I'm doing, and what I've been doing for the last 60 days, after we pulled out, again, some people made some comments. I've constantly said I was removing around 3 to 5 years worth of operating capital, around 56 grand. And some people are like, oh, why is that a big amount? Or like, because I said it was a big amount the other day. I'm not sure how much your life costs over the course of 3 to 5 years, but operating 2 businesses, it's not cheap. Anyways, keep that in mind. Nonetheless, since then, what I've been doing is just on the 11th every month accumulating, reaccumulating, because I actually don't know. In the intermediary of the market right now, like it's a heads or tails of who's to make of where it's going next. I still think we're in the intermediary momentum of the market. That's why we haven't shifted our sentiment yet. And there's a reason for that. So what I'll do right now is, in yellow is the market cycle of 2020 that we're currently in. And then what I want to do is, we've gone over this a few times before, but just for fun. So here is on the bottom half of the screen. Actually, let's give you guys the full screen here. On the bottom half of the screen, you can see the 2013 to 2017 accumulation cycle. Now, first off, this fits the range of accumulation that we like, around 1,300 days before we saw the extreme momentum breakout. And here, from the top of our buying climax to the first SOS2, you saw around 1,000 days of the primary breakout. So once we broke out of the primary section here, it was around April 17th in 2017. And just to the first bar, the first cycle up, we were at around 200 days. If we measure that same cycle outwards, where we are to today, we're at about 200 days. So timing wise, we're actually conspicuous. We're like pretty much right where we were on the last bull market cycle, around 200 days since the breakout of the box to the first SOS and following LPS period. So this is one of the reasons why we've stayed, the reason why I think that the bull market is not over, but there is a bit of a concerning factor here that we always need to pay attention to, is that we have had shorter cycles in the Bitcoin market before. We're back here in 2017. We did see a big bull market cycle up and then down, which quickly turned around. So this would be measured something like this. We could probably even draw it to some degree to make it look similar, but notice the depth and the duration. Here we had a big up and then the cycle down. The cycle down lasted 180 days. So here's one of the important parts to factor in here, is that what we're witnessing right now could be a longer duration period of reaccumulation effectively. That's why we still have this, let's say, $18,000 to $20,000 mark on our chart right now, which effectively represents the lowest regression line that we've been following for almost 2 years now. We're going to be coming up on 2 years pretty quickly, it feels like. So because that lower regression line of around $17,000 to $20,000, it could be an important area. What we want to do is recognize the fact that we did see a bull market cycle back in 2013 that went from $7 up to $200. So it's a 2,000% gain, extraordinarily high amount, before we saw a big retracement and then about 180 days of accumulation. Now that's a very short accumulation pattern, but it did yield a massive result and a move upwards. So part of me is starting to think that what we see is a longer duration reaccumulation cycle with maybe another 100 days where we go sideways. Now, that's not guaranteed. Now, one of the important parts that I really want everyone to recognize is that in the intermediary areas of the market here, it's not as easy as to be confident as when we see these long accumulation patterns of 1,000 days before the bull market cycle starts. And that's really what you want to be interested in. Your entry is more important than your exit, because if you make a good entry, then you can exit anywhere and still be in profit, just maybe not as much profit. So there is a lot of potential room to, again, to come down to this lower $16,000 to $20,000 area on our previous regression lines. Now, is that going to happen for sure? No. Is it going to happen for sure that we go up afterwards, or like go up from this particular trading range into a new cycle either? No. So what I want to do is, because I'm constantly moving through the market cycle and trying to understand where we are, when we're in these long areas of accumulation, this is why we go with the Arcane Bear. Bears are those that know how to forage and accumulate during the boring cycles, right? The bull market is very short-lived. Uneducated investors, and it's not the best time to be getting into the market. The best time to getting into the market is when basically no one's paying attention. So if you're here now, we're not there yet, but we will be, and we might be there now. And this is one of the important parts. Even if we come down to $20,000 and we jump back up to, let's say, 33,000, let's say we make a much bigger reaccumulation trading range that takes that 180 days that we saw, similar to 2013, it would be something like this, where we had a short duration intermediary cycle before moving up again much higher. And because we're in the middle of the market, it's much less easy to be as confident as we were back here at the beginning of the pandemic. So what do we continue to do to be good investors? You find the day every month that suits you the best, and you continue to accumulate. So even if we do see further downside, this should represent a greater opportunity. And this is, again, one of the really early mindsets that you as an investor, if you're new, will have to change, is recognizing that when you see downside and you're thinking about the macro picture, this represents great opportunity for you, not a diminished return on your initial investment. You're like, oh my God, I bought at 56,000 and now it's down here. Should I sell here and buy back here? No, what you should continue to do is form that mantra or form that meditation, that consistent habitual pattern that says every month, this is what I'm going to do. I'm going to accumulate assets. And that alone is probably one of the strongest forms of advice anyone could ever give someone. Now, this is not financial advice, so don't think that's what I'm giving you. But if I were able, or maybe going to give advice, that consistent, simple strategy is what yields the best results over time, and it can be repeated by literally anyone. In fact, those of you who may have a lower IQ will probably do better, because you're often less emotional than the people who have high IQs and have a poor temperament with managing their emotions, because EQ and IQ are almost a balanced function of one another. Now, that's a totally different convoluted story that I'm probably not scientifically capable of having, and I'm sure I'm getting part of it wrong, but nonetheless, does seem to be a borderline between IQ and EQ, at least on a rough sentiment. So if you know how to manage your emotions well and you just forget about this, you can repeat this process. The same thing back in 2017. Had you bought the all-time high, as long as you continued to hit your once a month strategy, you would have done extraordinarily well over time. But often this is not what happens. People will buy at the high, they'll sell down here at the low, they'll forget about it, and then before you know it, they're buying back here. thinking, oh my God, I'm not going to miss it again this time. And then bam. And now they feel uncomfortable again because they had no strategy. Your strategy as an investor should be consistent throughout time, and that is what will yield the best results. I will continue to show up and say that for as long as it takes because that's what's worked the best for me. The other thing that's worked the best for me is venture capital. So we will jump around here. Let's go to our main courses. But yeah, again, just to recap, redistribution here is quite likely. So keep that in mind. Even if it does happen, I believe it will be short-lived, probably something akin to the 2013 to 2014-15 cycle, maybe 170 days in this period. Again, we're 50 days through that, so we'd have about another 100 days of cycle process to go through, which could have us moving up very quickly somewhere near December. So keep that in mind. It's not that far away from where we are right now. So next thing, Ethereum again, when we look at these macro perspectives, we take a look at our regression lines that we've been following for over a year now. We're very high up. We are above the previous regression lines of both of our buying climax and our first automatic reaction coming out of that climax. And interestingly enough, you can make the same argument about fractal and scale and variance that we've gone over many times. Here we were making our entries through our accumulation channel back in April of 2020 when Ethereum was ranging between like $190 and $400. This was the entry you wanted to make. If you're new here and you're late, just remember that these cycles repeat, and that your learning process, even if you're learning something that will maybe not greatly affect you until we get there next time, it's really important to understand that these functions do repeat. So, well, not always. Ethereum could totally fail and it could go to zero and the function won't repeat. And this is the fun of venture capital. You have asymmetric upside or unlimited upside with only limited downside. So anyways, there's some really important parts of the thesis that you have to know so that you can stay emotionally stable and you can stay consistent throughout time. But where we are right now, again, we've had a huge amount of upside, even since our first entries to where we are today. We're up over 700%. This is why your entries matter more than your exits, right? We can still exit at a 700% gain here instead of 2,300%. So the amount of room you have for buffer and risk is really mitigated by your ability to enter an asset at a good time. And effectively, you had between 2018 and 2020 over 600 days where you could have been buying Ethereum every week or every month, which would have suited you the best. And again, this is why your entries matter more than your exits, because your exits will become a hell of a lot more easier to manage, and so will your emotions if you do so properly. So on the 4-6 hour here, we actually start to see a really interesting similarity here between both Cardano and Ethereum. Now, a lot of people have been talking about Cardano and how well it's holding up. If you look at them side by side here, they are almost identical. You have an extreme pinch to the top at around $2.40. Those were some of our first exit areas that we had gone over in our previous videos using our Fibonacci retracements from the top of our buying climax down to the range. You could see the 1618 was the primary profit taking area. We did say that there was room up a bit higher, but this was getting overzealous, especially from the potential midway of the market. So because we see these similarities, what they look like to me, and this is why I'm leaning towards redistribution, is these look like hypodermic tops. And we've seen these multiple times before. If I had them open, I would go to them right now. Let's see, actually, reaccumulation distribution. Let's open up the hypodermic top. There's the rounded top. That's what it just looked like we went through. Here's the head and shoulders. Head and shoulders look very similar. Yes, here's the hypodermic top. Excuse me about these. We're going to have to get these redrawn. We've done a few versions of these schematics of distribution over the last 2 years now. So here's what a schematic distribution, a hypodermic top looks like on our general pattern. And as you can see, these are not too dissimilar. What you end up having is a lot of your major signs of weakness are actually on the downside to the right. And both Ethereum and Cardano have this. We also have the Jesse Livermore breakout pattern where we go up to 8 and then points 9 through here before we see a larger breakdown, which could bring us as low as $600. So Be prepared for that downside if it's happening. We don't know yet. It still could go either way, flip of the coin basically. And because of that, we just want to rely on our investor instinct and strategy to be the most effective during these times. Now, in other areas of the market, we're starting to see what actually might look like a bottom into this area. So Avalanche has started to perform and hold a nice bottom here to around 11 bucks. I did make a mistake back here in February, and I added more to my position, although we had really good entries for all these. So it's just basically doubled down at the wrong time, but that's okay. We all make mistakes. Solana, again, also showing this nice kind of 8-9 pattern through the Livermore megaphone pattern that we had gone over and continue to go over. But again, we're seeing this kind of bottoming pattern here also in 1 inch, right? So now there is room for further downside here, but not a whole lot. You know, with 1 inch, there's a room for another 50% downside. And again, we could see this swing come through all the markets, but because of that, we just want to be aware that this DeFi sector is huge and it is undeniably powerful. What I've witnessed from the ability from things like Compound, Celsius, DAI, Aave, all of these interesting loan protocols, the ability to cross-border, like the new automated market makers from Serum to Sushi to Uniswap to 1 inch, fascinating and in the early days. So to me, these still represent a huge opportunity, which is why I've left this tails I don't lose much, heads I win. You know, it's not really easy to understand that, you know, with what we've gone over with Matic, that if you had put $1,000 in Matic and walked away, it would be worth like 150 grand today. Right, so a small investment can yield huge results in asymmetric markets, and the best way again to continue that is just through a simple investment strategy, not even focusing on taking profits, more so about finding good entries and walking away for what could be years. A lot of investors actually end up making mistakes by taking profits and not re-entering. And you think, well, I'm smarter than all of the other investors who have been here and showed up. And well, you might think that, but the markets have been here longer than anybody, and the markets have perfected the ability to take money away from you effectively, right? Not give money back to you. Their goal is to take money from you. If you imagine the market as a single individual, we call him comp man. The heuristic of the composite operator by Wyckoff was a genius idea. So that comp man has gotten really good over the course of his lifetime to take money away from you, and his lifetime extends generations further than yours. So keep that in mind. Mercurial seems to have hit a bottom here as well. The first part of this trading range I was excited about, and then as soon as we broke the bottom here, we've fallen down consistently. Still up on our original entry on the IDO on that one. Again, heads I win, tails I don't lose much. When I see lower prices like this come in for any asset, I generally start to look at acquiring more if I'm interested, and then also being patient to see what the market cycle brings us to. Mark, we're keeping our eyes on just because I like these ideas of algorithmic stablecoins. It'll be interesting to see how the future of these kind of move forward, especially because we know we can yield such great results by going through DeFi applications, yearning. I mean, if you drop $10 million in a Compound multi-sig wallet or something, you're earning like $30,000, $20,000 to $30,000 a month in yield, which is an enormous amount of cash. I mean, that's enough to do most of whatever you would like throughout the year. So FTT is another range here. We can see we're up this beautiful, nice rising channel out of our previous area of reaccumulation. We went straight up and then we've come right back down. And now we're accumulating in this trading range. So we see that we had a distributional trading range, and then what might be a new form of accumulation. So there are positive signs in the market overall. This is why, like, everywhere I look, I'm like, I don't know, this is a 50-50 hat roll right now. We know that there are huge interests in Bitcoin and the rest of this sector, hundreds of billions of dollars, and the productivity of this market sector is beyond comparison. So I really, even if we see downside, this represents a great opportunity to accumulate more and really nothing else. So it's hard to exactly say. Again, these, as you can see, we had a distribution, a type of redistribution coming off the top here, which pushed us down, and we've started to come back up here. So we're looking at the point of control for things like FTT. This will hopefully provide us some clear guidance. And we saw that with Solana too, as we couldn't get back above the POC or the point of control here, this red line, and we fall back down. So it's going to be interesting to see if do we come back down to this $11 area for Solana. There is a reason to believe that. We actually see this in synthetics as well. I'll open up synthetics, SNX. Where is it? Yes, here's SNX. So synthetics, we were a little bit hasty on our once we broke above the point of control, things were looking good, and then we fell right back into this descending channel. This could be a low volume spring, which is nice to see, and we've seen a lot of buying power come in the last few days, but not enough to return us anywhere. And if we look where we are, there's still a fair amount of room for downside, although we did kind of touch at least our previous bottom of around $2 to $4 here. So we did find a potential bottom here for synthetics as well. So there are signs in the market that we could see a recovery. But again, when we have this much indetermination in the market, the best thing to do is, I think, revert to your investor strategy. Now, if we were back here, this is a throw everything in the kitchen sink moment for both Bitcoin and Ethereum. We were yelling as strongly as we could to go long at around $240 to $400 for Ethereum, and here's why. These are the entries that you should be interested in making. If you are here late, you should be interested in finding out the macro story to make sure that you are here for the next time great entries become available. And even though the great entries are not right now, you can actually just consistently execute a strategy that over time, if performed every month on a frequent basis with money that you do not need to spend on your child's diapers, you will yield great results. So focus on being a good investor during these times and give yourself the time to really learn, study, and understand the almost academic-like nature of markets. Things like scale invariance, these are largely fascinating topics that have a huge amount of fun things to go through, especially if you are like me and appreciate reading and studying and learning more about the way we think the universe might work. Okay, next thing, the dollar index. We like to I think we're going to start all Monday mornings off by looking at the general broad markets just to see where we're opening. If we pull down to the 6 hour, you can see we are stubbed up in a much smaller trading range. Could go either way with the dollar. Some people have talked about relationship between the dollar and Bitcoin. That's more of a correlation and causation are not the same thing, right? You can also do that with the VIX. The VIX has an underlying relationship with what Bitcoin's price is doing, but with the opposite effect. So here, when the VIX is super high, that's pretty much the best time to be buying almost any asset, especially when it's like inordinately high. Just the volatility that's going on. Again, we're still in this beautiful descending channel. We have not broken out of that, which is positive. There are other places in the world that are going into lockdown. So I think that's important to understand. That your consistency here is really going to yield the best results. So that's why we just keep showing up and trying to be as consistent as possible with that story. It's like a morning meditation. You just want to get it done, throw in your 20 minutes to an hour worth of work, and then everything works much better. So beautiful descending channel here on the volatility index. I'm looking for the day we actually break below this channel. I think it'll be a huge moment. It'll, to some degree or another, be like our return to quote unquote normal, whatever that means nowadays. Okay, so the Nasdaq and the S&P 500 have been performing really interestingly. This is, again, the flip of a hat type of moment. So we've been watching this horizontal trading range or a Wyckoff trading range with the Nasdaq as well. One of the things that we are concerned about is that this is a phase C and an upthrust before distribution takes place. So here we see our buying climax, our secondary test, our automatic rally, and we could be going into the upthrust. So the UTAD as it's spelt on our charts here. And what this would end up looking like is a rounded top. So for those of you, again, that like studying, there are a bunch of different distribution schematics. These are our old ones. We do have new ones that we have built on the website for our private members, but these are also in there for our private members. Here you can see we get this rounded top type schematic, and there are a bunch more to go that follow these types of ideals. Again, what I'm worried about here is that we get a rounded top in the Nasdaq, and that bodes, and that is also that correlating moment here that brings Bitcoin back down to the $16,000 to $20,000 area as well. Is that over the next week or two, what we do is we get a breakdown back below the box for the Nasdaq. Now, I want to argue against myself on this particular topic, and we'll do the S&P 500 to make that argument here as well. So the S&P 500 also has this horizontal trading range that we've been following, and since 2016, I've made a bet that what we're going to actually see is just market only up scenario. One of the really interesting factors about where we are right now is that unlike the early 1900s, when hyperinflation started to hit places like the Weimar Republic or other countries, it was usually due to a flood of currency hitting the markets at any particular moment. And we don't really have that anymore. Nobody has like $1 billion in cash underneath their bed. So because of this, it's hard to get a lot of inflation to hit the markets and the streets the same way we saw it. Now we do see an inflation in overall prices of assets, day-to-days, everything. There's more people moving down to Costa Rica than I have ever seen. You can now get residency here for $150,000 investment, which is amazing. So because of that, we see the dollars aren't even just moving back into the States, which is categorical, or generally how these hyperinflation moments hit, is the US dollar will move back into the country of the US. This square box is hey, this is the US. And as that money floods into the US, this is usually where you get hyperinflation, because all of the assets in the United States start to drive up. But not all of those assets are going back to the United States. As a matter of fact, some of them are coming down south to where I live in Costa Rica, and people are buying property here. Yay. So hyperinflation is not really hitting the streets the same way it had in the past, because people have access to fly around the world in very short periods of time, move that capital, and invest it into somewhere else. So a lot of those US liquid dollars are actually rushing into other countries. We might not see hyperinflation the same way we expected. And my long time standing thesis since 2016 is that we're going to see a market cycle basically only up moment. And there are other reasons why we've gone over this kind of speculation before too, is that if they just keep printing, well, they're doing two things that are ultimately horrible. And one of the reasons why we continue to invest in Bitcoin is because they are degrading all the other evaluations of what an asset can actually be on the market. So because we know they are working with the general currency that we all use, you don't really want to hold on to the currency for too long as a hot potato. But here, let's go back and look. Between 1990 and 2001, we had our first cycle up of the buying climax. We saw the down cycle of the 2001 September 11th.com crash. We went up again. It took another 7 years into 2008 before coming back down in the financial crisis and the banking crisis of 2008. Now, after that moment in 2016, when we got here, I thought we were going to see a big market dump, because we could come down a lot lower effectively, right? And we're up really high, and we know that this economy is basically held together by glue sniffing politicians. So because the glue sniffers are kind of keeping us afloat with their imaginary hyperbolic belief that the currency has any value, I figured in 2016 what we were going to see, and this was where I went out on a limb, was an only up scenario. I still believe that we may see the S&P 500 double from where we are today, as they just keep printing and creating this fake currency drug feeling that all investors are currently sitting in, and that we may not see the massive hyperinflation, because it's not just going to the US country, it's going to all these other countries, really kind of stifling that shock of the market that people would generally get from this massive amount of fiat currency hitting the markets, because it's not just coming back to the States. So we go back to our more limited view and our more micro thesis here right now, and we look at the S&P 500. It's well outside of our range now. So we've seen these ranges where we break out, we break it to the upside on a trading range. We saw this with Ethereum. Oh, what was it back in back here? Here is the rising. That rising asymmetric channel, asymmetric triangle, which we've seen here before it broke up another big time. And I start to speculate, wait, are we about to see that on the S&P 500? Are they just going to print trillions of dollars more and jack the entire market up? Or are we about to see that phase C UTAD that we've seen in the past? We saw it with Bitcoin, we've seen it with many other assets, where we start to come down, we have a sign of weakness, and then we break down in the markets. Now, I don't think that they can let the markets break down. I don't think that we can let ourselves fall into the dismay of a market collapse that we saw in 2008 without basically destroying everything on every continent of this planet. So that's a really tough question. We're at a really tough philosophical question where I don't think that there's any other choice but for them to keep printing. So if they keep printing, what's that going to look like on all of the asset layers? And I've been convinced since 2016 at least that we would be only up. So far, that has played out. Even the very limited time we spent on the downside in the pandemic, we had a very quick boom, very, very quick recovery. Now, the other question is, do we see a larger trading range maybe take place here eventually? And that's not a bad way to go. There's a reason to believe that both 2019 and 2018 could become our primary support of what is a bigger trading range, just because we had so much volatility and craziness take place here, that you would see something like this. We'd have some downside, we'd form a larger trading range, and it might go alongside the Bitcoin traders. Because what I'm trying to get to, because of all of this, because of where we are in the S&P 500, the fact that we're making conjecture on an only up scenario, which to me still sounds ludicrous, but has been right for the last 5 years, well, crap. If you've been right about something that's been totally ludicrous for the last 5 years, what do? Well, you start to maybe rely on that ludicrous behavior, and that these markets are just going to continue to be, let's say, insane and do things that are irrational, and they're going to just continue to print money. So, hey, why not? Let's not bode too much on the downside. But if we start to see a breakdown here in this part of the trading range, again, it can very easily become a schematic of distribution, very much like the ones we had looked at in the past. And let's see, and we've got tons, there's tons of these variations of these schematics. Let's take a look here, just so you guys know. These are all available for the private group. But let's see. Oh yeah, here's a very classic one. This is your ascending wedge. And this is the difficult part, is that these ascending wedges, what we're looking at here, like this, these ascending channels can become a schematic of distribution as well as accumulation and breakout. So this is why the intermediary aspects of the market, as you saw here with Ethereum, can be so difficult, is because you can have this ascending wedge breakdown potential that actually just continues up higher for the final moments, and then to become what might be a hypodermic top here as well. So we want to keep a really close eye on the markets over the next 2 weeks. We've been in this area basically for the last 40 days. It's basically equivalent for the Bitcoin price cycle too. So yeah, around 49 days here for this entire phase C that we can tell. So anyways, this is that's today's morning market meditations on Monday with Tiho. I appreciate all of that with you guys as well. Been a lot of fun. I always have a lot of fun doing these. We've got more. Oh yeah, one thing I wanted to go over. Real Fever, for those of you that jumped in that IDO alongside us here, it did phenomenally well. So let's take a look at that really quickly. We were on Dex Tools. Oh, that's the Arcane Bear token. Let's go. So we produced our Real Fever podcast and all of our research on the 7th. It went live on the 10th. And in that very short period of time, you're going to love seeing this, ladies and gentlemen. We had a 13x gain this week in the private group. So thank you all for that. That was a lot of fun. I did not expect that. In the middle of a market cycle, finding a 13x is always interesting. So I've removed my initial capital at this point, and I'm just letting the rest ride. Yeah, it was 1,200%. So yeah, from the 8th of July, the launch was on the 8th, to the tippy top there, almost 1,500%. So over a 15x. If you want, you can go in We do all this research. We produce all this content for the private group first. It does come out for everyone else in the free channel. Some of you guys made comments like, oh, well, who would have thought you'd get more up-to-date content on the paid? Of course. That's why we continue to do this. Do you know how much this webcam costs? This is a $6,000 webcam right now, fuckers. I was going to pay for gear to provide free content all the damn time. So yeah, we have a paid group and we provide this information faster. So we went over Real Fever, had a 13x gain. Again, I've taken out my initial there. I'm just going to let the rest ride. If you want to learn more about what Real Fever is, we had the podcast with their CEO, Fred and Tunes. You can watch that. It was a lot of fun. He actually said something really funny. He's like, well, don't you know about fantasy football? I was like, dude, in none of my fantasies is football included in that. So anyways, check out that video. It's got over 1,700 views now. It was produced on the 7th of July, the day before they went live. So we just finalized our research, produced our research update, and then made our entries on that the day it went live as well. So I'm not normally big into the NFT world, but I've got a group of people helping now. So shout out to the tech team, all the Kodiaks, the Polar Bears who are helping us build. I really appreciate that. This one was a fantastic gain for us. That was a huge return in a very short period of time. Again, had you put $1,000 in on July 9th, you'd be sitting on 10 grand less than 3 days later. So congratulations to all the Private Bear family who played along with us on that one. And remember, our guiding light to this thesis for any of you that are interested is tails I don't lose much, heads we win. Anyways, this is Teal with the Arcane Bear. Be sure to follow us on all the social media channels down below. If you like to try new things and consider yourself adventurous, remember that the disease of the early investor comes from over emotional trading and a lack of education. So if you would like to cure that, join our private mastermind group. We produce a newsletter and we produce content within the private group on a day-over-day basis. Again, we don't always have time to produce the newsletter like we did with Real Fever. We got it out on the website, produced the podcast, made our own investment all in less than 72 hours. So sometimes they happen quickly. So if you're not interested, if you need more time for that, remember that we've got decades ahead of us here. This is really about remembering the strategy and learning how to play this tails I don't lose much, heads I win game. Anyways, thank you guys all for joining us. Sign up with the private group, arcanebear.com/private. If you are not happy, we'll just give you a refund. But we have a really good success rate with everyone being happy and the goals that we provide and produce. You just got to be patient. Some people show up for a month. They're like, well, I didn't get to do. Look, not every month do you have a 13x winner, right? Even with Mercurial, we had a 10x out the gate with that one from the IDO launch. It was at 900% within the first 24 hours of its launch, and then it's retraced a lot of that in the last 47 days. Yeah, 70% it's retraced, right? So if you're in profit with Fever, you made your entries like I did. We've closed out our initial capital, which is our tails we don't lose much. Tails we can't lose anything now. It's only heads for upside. So basically walk away from this for the next 5 to 10 years and see if we got it right. And if we didn't get it right, didn't lose anything. If we get it right, well, we've seen what happens. You sometimes end up with 50, 100x, 150x like on Matic. So very, very powerful results to understand the process of this mantra, and it is not about any specific investment. It is about the investment thesis at large that makes the most difference. So thank you all to the new subscribers from the BitBoy Show. We're going to do another Around the Blockchain podcast on the 19th. I love jumping on there. For all of you that have been longtime supporters of the Bear family, again, thank you. I love this stuff. I have a lot of fun doing it. But for those of you that make comments about, well, why would you give better content away to the paid group? Well, just say that one to yourself a few times and really start to think. If we're providing content days in advance of a 13x gain, like what is $90 a month to you? Like, just shut and go somewhere else if you're upset about the free content. It's your fault, not ours. Anyways, Teal with the Arcane Bear will leave you with our smashingly cool intro today, ladies and gentlemen. Thank you. Bam.